How to grow money with mutual funds. As an individual investor buying a mutual fund, your money is invested in a diverse pool of assets, such as stocks, bonds, and cash equivalents. Usually, individuals buy mutual funds either through personal banking or discount brokerage, which in turn sends your money to a fund manager to invest. Fund managers monitor financial trends and trade assets in the markets, for example in NASDAQ, and invest accordingly to bring returns. While stocks bring dividends or increase their value in the market, bonds and cash equivalents bring interest to the fund. What you see as return on investment is the combined growth of the various assets and the potential capital gain or loss when you sell your fund. Most people don't have the time or expertise to pick up individual stocks or bonds to invest in volatile markets. Buying a mutual fund can be a good way to invest in a diversified portfolio through quick transactions, almost like shopping. After determining your financial goals and risk tolerance, when eventually choosing a fund, use independent investment research to view and compare its report with other funds. Look for all the assets the fund comprises of, its past performance, and the cost, usually represented as management expense ratio or MER. It is important to understand the fees and commissions associated with each transaction since it will significantly impact on your rate of return. Finally, remember that the financial market is unpredictable, and it's impossible to predict future performance of a fund with absolute certainty. Fundamentally, it's important to understand investment basics to develop your investment strategy and stick to it. For example, some investors use the couch potato strategy by purchasing index funds, which follow the market average return with lower cost. There are many other such strategies, but you must rationalize your choices when buying a mutual fund, since it is a long-term investment. Lastly, purchasing a mutual fund may not be the end of your involvement. You should track the growth of your investment for a rebalance a couple of times a year. It's not so hard since there are great tools that do most of the work for you. Stay tuned for more on this.